Hey guys, how's it going? This is Yasir Khan coming to you with another video, and in this video I will be talking about why or when you should be investing in dividend stocks. Okay, so I get this question quite often on my Facebook page where people are trying to figure out that if they want to invest in a passive income instrument, what kind of you know place should they invest in. Now this video is just for dividend stock investing. I won't really talk about different asset classes in this video, but I will let you know, I'll give you a very good idea as to whether dividend investing is right for you or whether it's not. Okay, so the first thing to understand is that whenever you are buying a share of or stock of a company, you are becoming a part owner of that company. It is just another way of saying, well, I want to invest in such and such company. Okay, so you are a part owner of that particular company. Now, depending on how that company or corporation or whatever it is, depending on how well it performs, you will get a share of that profit, right? And dividends are the after tax profits of a company, right? So after the company is goes through a year or a quarter, they post a profit, they pay off all the expenses, whatever's left, they give you a dividend from that amount. Okay, um, and if the company performs really well, there's a very good chance that you keep getting paid that dividend every single quarter, every single month, or every single year, depending on how that company is set up. Now, on the other hand, if that company is going into losses, then you can, with a certain degree of certainty, say that, well, yeah, they paid me the dividend today, but they might not be able to pay the same amount of dividend or any dividend at all the next month or the next year. Okay, so it depends on the performance of the company. Now, the good thing is that you can easily figure out which company to invest in, because there are so many tools online on the web which tell you that this company in your country has been paying out increasing dividends every single year for the last 25 years or 35 years or 50 years, right? So that's not the issue. The issue is whether you are whether your risk tolerance is made for dividend investing. Now, is dividend investing right for you? Well, the first thing to really figure out is what is your risk tolerance, because if you've been following my videos, I always say that you should buy dividend stocks when they are trending, when the price of those stocks is trending at the lower range, which means that you do not have a whole lot to lose because the price is already trending at the lower range. For example, if you know that a stock has been trending between $25 to $50 in the last 10 years, and currently if the stock price is around $27, well, then it is right next to the low range, right? And that's why when you buy it, assuming that all the other numbers are working in your favor and you do your due diligence, if you buy at $27, well, of course, then historically that stock cannot go down too much from $27, right? Because the range is $25 to $50. Now, on the other hand, if the stock was trading at $48, then I personally would not buy it, because there's a big drop that it can see, just because it's, the prices are inflated and they're right next to the top. Okay, so if you buy at the right price, then there isn't a whole lot of risk. The price can only go up, especially if you're buying the stock of a company which has historically proved to be a gold mine, right? The second thing to understand is that, generally speaking, if you have a very low risk tolerance, then dividends in stock investing is not really for you, because Warren Buffett says that if you're investing in stocks, you should be willing to let the stock price go down by 50% without having a heart attack. Okay, and I know that most of the people out there, it could be you, we have a huge problem when the price goes down. And I keep telling people not to invest for capital gain. In other words, you should be investing, if you're investing in dividend stocks, you should be investing to keep getting a dividend every single month or year or quarter, whatever it might be. not because the price is going to go up by $10 a share. Okay, this is a huge difference. So it does come down to your risk tolerance. A good thing to understand in dividend investing is that if you choose the right stock, which is by far the easiest thing you can do, because there's so many tools online, and you do your research properly, all you have to do is invest money into that dividend stock and just wait for the dividend payments to come in, which means that it is a pretty hands-off asset. Okay, if you buy at the right price, if you buy into the right company and for the right time period, which can be long term, 10, 20, 30 years, whatever it might be, then you are in luck, because especially if a company keeps paying you higher dividends over time, then you'll keep making more money over time, and the price of the stock will increase over time as well, because you bought when the stock was low. All right, so it is pretty much hands off in that sense. The issue is not exactly an issue, but the drawback, which I personally feel to be the case, is that you cannot use leverage when investing in dividend stocks. For example, in real estate, especially in US, Canada, you can get what is called a mortgage. You pay 20% down and the bank loans you the rest of the money, 80% of the money, which means that when you make gains on that property, when you make a profit, that profit is magnified because you are using someone else's money. In other words, let's assume you have a $100,000 property that you want to buy. All you have to risk is $20,000. The bank lends you $80,000, which means that your losses are compounded and your gains are compounded. And if you do everything the right way, you will not face a loss. It is almost a zero risk return. Okay, but then again, this video is not about real estate investing. So yeah, please understand that if you want a hands-free, hands-off asset, dividend investing is a very good idea. If you have medium risk tolerance, then yes, it is a very good idea to put your money in dividend stocks. Okay, a lot of people over the age of 50, especially seasoned investors, they put money in there because they know that they won't have to manage this asset every single week or every single month. All you have to do is put money in there and then keep receiving the dividend checks. But guys, please remember, there is no asset out there which is risk free. Okay, they can feel to have zero risk. Okay, there could be a feel that, well, the prices are going up, this is a really safe asset, but there's not a single asset out there which has a zero risk. This is just the way it is. Okay, I personally love dividend stocks for my own reasons. I have a decent risk tolerance. It doesn't really faze me if the price drops by 20% because I know that I won't be taking out the money anytime soon. Okay, I like the passive income that it generates. But then again, everyone is different, and figure out what works for you. Okay, figure out what you want, and then go for it. And start small, guys. Please don't just put in $100,000 of when you're starting learning this stuff. Okay, start with a paper account, then put in $1,000 or two, like $2,000. Figure out how the platform works, figure out how the prices work, the market orders work, limit orders, how they work, and then increase the amount. Okay, this is going to save you a lot of hassle. All right, so thank you once again. I will see you in another video. Take care.